So is it a pause? Is it a pullback? We're going into Jackson Hole tomorrow. A lot of talk about what Jay Powell's going to say, what Tony's going to take, and what that means for Fed rate cuts and investor sentiment. What is your take as we await for that Jackson Hole speech?
Look, obviously, if Jerome Powell decides to come out and be super dovish, which is not my expectation, that will certainly change the tone, and you'll see markets start to rip. I know there's like a camp out there that thinks that Powell wants to use this platform, ostensibly his final Jackson Hole address as Fed chair, to do some sort of like fiery, politicized tirade about the importance of the independence of the Fed. I just don't see it that way. I think the Fed is looking to cool the temperature down, the political temperature down, also the temperature of inflation. But I do think that you'll get enough dovishness that it could be supportive of the market. I just don't think for investors it's really all that important. We've gone this long without a rate cut. Rate cut would be nice. I think rates are too high given the rate of growth in the economy and the state of the labor force. I think most people agree. So if they do 25 basis points and then another 25, or they do 50 and they sort of signal that's all that's needed, I just think that's a sideshow. The bigger story is whether or not this AI trade has legs into year end, and if it's powerful enough to drag the rest of the market along with it. So far, since the April 9th low, that has been the story. Russell 2000 has actually outperformed the S&P 500, and the mid-caps are no slouch either. So it has been a market-wide recovery from the worst of the tariff lows. We need that to continue, in my opinion. And of course, the only way it can continue is if these AI stocks are powerful enough to at least hang at current levels. I don't know that I need them substantially higher. The best clue that we'll get as to whether or not that's going to be sustained into the fall is whatever happens in reaction to NVIDIA's number next week. I really think that's the next big thing on the calendar for the stock market after we get through the events of Jackson Hole.
You know, Josh, it's funny you say that. You sound like you said most people don't think that we need a rate cut to move the market higher. You're actually echoing some sentiments. I was talking to Steve Sosnick from Interactive Brokers a short time ago. He says, what are these rates restrictive to? They're not restrictive to the markets. They're not restrictive to speculation, not restricted to private credit. So really, he doesn't feel like a rate cut's needed to keep the rally going.
They're hurting the housing market. It's hurting the housing market.
But we saw new highs after what a lot of people thought was a better than expected CPI, because they thought that could lead into a rate cut, maybe 50 basis points. So why are so many people cheering for a cut if we don't need it?
All right, I'll explain why. Only like 20% of people have a meaningful amount of exposure to the stock market. So the real story of wealth in this country, it's all tied up in houses. For 55% of households, their house is their biggest financial asset. And the reality is the housing market needs rate cuts. I would argue the best thing for the middle class of America would be more activity in the housing market. I'm not saying higher prices. I'm saying more turnover. Existing home sales have been horrendous for years now, and that's what's being held back by Fed funds rate in the fives, in the high fours. We really need to see a situation where mortgage rates come down. We need to restart activity in the residential housing market. And until we do that, basically we're playing this game where the wealthy get wealthier because of their outsized exposure to the AI trade and to large cap stocks. Yeah. And everyone else is sitting here like, I don't know, everyone's saying the economy's so great, it's not great for me. We need to bring liquidity into the housing market. We need to lower rates for that reason. And by the way, I don't think bringing rates down by 50 basis points is going to be some like calamitous thing for inflation. I really just don't think it works that way. So I think it's overdue. Just my opinion. I'm not on the committee, so who cares? But you asked me, what is it holding back? It's holding back, I don't know, 100 million American households that really would like to refinance.
Yeah, fair point. Main Street and Wall Street are not the same thing. Malcolm, I saw you kind of nodding your head. Do you agree with Josh's take that we don't need the rate cut for the market, at least? Maybe everyday Americans need it for more liquidity in the housing market where a lot of their wealth is.
Yeah, I think Josh was over there searching for his copy of my notes when he was getting started there. But to the point about housing, I think it's interesting that we just got commentary from Redfin that we're seeing home buyers walk away from house purchases at a record rate. And so if you think about where I live, D.C., where a teardown starts at $1 million, it feels like an eighth of a point is the difference between getting that home and not. And so, yes, certainly for anybody who's looking at purchasing a house, potentially refinancing a house, rates are restrictive. And so when you talk about the stock market versus real estate, yes, I agree. We don't necessarily need 2 cuts this year, 1 cut this year. Who cares unless it's something massive like 50 basis points each time or more. Not going to be additive to the AI story, because realistically, Microsoft isn't going to borrow to spend $80 billion to build out data centers. Neither is Amazon, neither is Alphabet, neither is Meta, whoever else. And so the cuts don't really have anything to do with that AI story that's been really carrying the markets for the last year and change.
All right, Jenny, I see you have your own notes in front of you. You're not searching for anybody's notes. You got your own thesis here. First, let's go back to what Josh was saying. Do you think the market needs a rate cut? And then if the market does need a rate cut, how do you explain some of the action we have today? We also got earnings from Walmart. They flagged tariffs. Yesterday was Estee Lauder. I mean, we continue to hear this tariff story from retail names.
Yeah. So I think actually Josh completely nailed it. I wouldn't argue for a remarkable change.
Mic drop.
I know, right? I wouldn't argue with
Jenny,
single
don't do
thing.
this. We don't need to
don't worry, I got more,
facilitate
don't worry.
this.
No, I'm just telling you, like, it doesn't happen often, Frank. So when it's there, I just need to be like, holy smokes, Josh.
On a very special halftime report.
Oh, isn't that sweet? I should bring you flowers. But what I don't think we do need a rate cut. I think what's happening in the market right now is neither a pause nor a pullback. I think it's potentially just a consolidation and a reshuffling of leadership. So I like the way you said we need the top 10, the Mag 7, the AI play to at least not crack up, and I don't see any reason they should. They do have some stretched valuations on that mix, but they also have truly spectacular earnings. So like maybe they just need to consolidate, and within that consolidation, maybe then there's a leadership shift going on. So we see things month to date like healthcare and staples up 5%. IT down 0.5%. That makes sense to me. The healthcare and staples are trading at insane valuations. Like healthcare, Goldman put out a piece a couple weeks ago, and I'm going to misstate it a little bit, but it basically showed where valuations are, what decile valuations are relative to their 30-year average. Healthcare is in like the 0 decile of valuation compared to its 30-year average. It's just being treated as if there's no money ever to be made and no earnings. Money should flow in there.
Well, we're going to get to healthcare in a minute, but I think you're talking about the valuation of the broader market as well.
And about how there's leadership shift going on. So I think that's what's happening. And in that, it isn't a pullback, it isn't a pause, but there's going to be movement. So we're going to have some ugly days, we're going to have some great days. You're going to see things that have worked stop working on a relative basis, but I don't think anything crumbles. I think this administration has said to us very, very clearly over the last 4 months that they will do everything they can to keep asset prices high.